What if I told you there's an AI stock so explosive, it's got Nvidia clutching $4 billion worth like it's their golden ticket to the future? What if this company's revenues just tripled year over year, smashing expectations and leaving Wall Street scrambling? And get this, what if the stock just plunged 45% from its highs, handing you a once-in-a-lifetime chance to scoop it up dirt cheap? Buckle up, because this isn't just another stock tip. This is your blueprint to getting rich without relying on dumb luck. We're diving straight into the heart of CoreWeave, ticker CRWV, and I'm not wasting a second of your time. Picture this. You're staring at your portfolio, heart pounding, as the market crashes around you. But while everyone else panics, you're calm, collected, because you've got the inside track on a company that's powering the AI revolution. That's the power of what I'm about to reveal. The drama unfolds now. Nvidia doesn't just invest, they dominate. They pour billions into CoreWeave because CoreWeave is the unsung hero of the AI boom, acting as the Amazon Web Services for artificial intelligence. Imagine massive corporations desperate for GPU power, but they can't wait years or burn billions building their own setups. CoreWeave swoops in, delivering instant access to cutting-edge infrastructure. Right now, they operate 33 data centers across North America and Europe, packed with over 4 million Nvidia GPUs. They command nearly half a gigawatt of active power, with 2.2 gigawatts locked in contracts. This isn't hype, it's raw power fueling the future. But who exactly feeds at this trough? CoreWeave courts 3 elite customer types, each with insatiable hunger. AI labs devour massive compute for training foundational models. Think beasts like GPT that rewrite reality. Hyperscalers, those tech titans, crave overflow capacity when their own systems buckle under demand. And enterprises? They demand seamless inference solutions to deploy AI in the real world. CoreWeave doesn't just serve, they anticipate. They span Nvidia's Hopper and Blackwell GPUs, snagging privileged access 6 to 12 months before the masses. That's not an edge, it's a chasm, leaving competitors choking on dust. OpenAI knows it. They inked a $12 billion 5-year pact with CoreWeave back in March, then pumped in another $4 billion this quarter. Why? Dedicated compute for training and unleashing models like GPT-5, those reasoning juggernauts that dissect problems step by step, code on the fly, and consult expert networks before spitting out genius. Inference just devours power, and CoreWeave delivers without flinching. But Microsoft? They're the whale, devouring over half of CoreWeave's 2024 revenue after an 8-time spend surge from 2023's $230 million deal. Azure overflows, GitHub Copilot explodes, Bing AI surges. Microsoft turns to CoreWeave to keep the lights on. Here's where the tension really ratchets up. You think Wall Street gets this? Think again. AI data centers swing wildly. 30% power draw for inference, spiking to 90% or more during training. It's chaotic, spiky, unforgiving. Even hyperscalers falter, relying on peaker providers like CoreWeave to surge in during peaks, preventing compute blackouts that could cripple empires. Just like peaker plants stabilize the grid, CoreWeave stabilizes AI, armed with the latest GPUs and endless power. But the market just blindsided itself. CoreWeave announces acquiring Core Scientific, and the stock craters. Foolish, absolutely. Core Scientific, once a Bitcoin mining giant, crashed in 2022 amid crypto winter and energy spikes. But they rise from the ashes in 2024, pivoting to AI with 1.3 gigawatts across 9 US data centers, $10 billion in contracts, liquid cooling for dense GPU clusters, utility deals for cheap power, and setups optimized for deep learning and generative AI. This acquisition isn't a gamble, it's synergy on steroids. CoreWeave absorbs it to blast through their $30 billion backlog of demand. Let that sink in. A company valued under $50 billion sits on $30 billion in signed multi-year commitments. Demand for AI infrastructure is skyrocketing, with the global market poised to 8 times by 2033 at 30% CAGR, or faster 40 to 50% if supply catches up. CoreWeave isn't just riding the wave, they're the wave. Undervalued? Undeniably. Show me another firm with a backlog worth over half its market cap. But the real fireworks? Their earnings. Before we dive deeper, a quick shout out to my secret weapon against media spin, Ground News. They dissect 60,000 articles daily, rating bias and factuality. Take Microsoft's $4 trillion milestone. Left-leaning sources harp on data center spends and temporality. Right-leaning ones celebrate earnings and AI triumphs. Blind spots reveal what's ignored. It keeps me sharp, unbiased. Snag 40% off their Vantage plan at ground.news/TSI or my link below. Unlimited access for $5 a month. Thanks, Ground News, for transparency. All right, back to the blaze. So, CoreWeave mints cash by granting access to AI infrastructure through these multi-year contracts, totally ditching those flaky pay-as-you-go models. Their $30 billion backlog, yeah, that's basically pre-sold gold. Sign a deal, submit a purchase order, CoreWeave gets everything deployed in about 4 months, and then boom, monthly payments start rolling in. Customers can extend, expand, or just grab those on-demand GPUs whenever they need. It's a triple win guaranteed capacity for clients, predictable revenue for CoreWeave, and honestly, crystal ball visibility for investors. Earnings are exploding. $1.2 billion in revenue this quarter, up 207% year over year, with 30 to 50% quarterly growth. Most firms this hot would stay private, but hey, this is your early ticket. That backlog? It's now $30 billion, up 86%, fueled by OpenAI's $16 billion deals and those big hyperscaler packs. Hello, Microsoft. About half are 2-year contracts, 40% are 2 to 4 years, and 10% are 4 to 6. That's a runway that just stretches out to the horizon. But yeah, shadows loom. There are risks that could just devour everything. Capex, it's $2.9 billion this quarter, which is 2.5 times revenue, and that leads to a $290 million net loss. Margins cratered from 20% to just 2%, thanks to a $145 million stock-based comp, which is up 20 times. Then, the lockup ends August 15th after the March IPO, letting insiders cash out those 100 to 200% gains. Add in the $9 billion core scientific buy, and you get panic sells. The stock crashes 45%. So, is this the end? Or maybe just the beginning? Tension builds, hold your breath. These risks are rocket fuel in disguise. That capex scales the empire to service the $30 billion backlog, promising massive returns. Acquisitions secure power. Data centers bottleneck on energy, not cash. Adjusted EBITDA? $750 million, tripled year over year, 62% margins once deployed. Unit economics scream profitability. Stock-based comp? Standard in AI's talent wars, demand outstrips supply, so equity lures geniuses. Palantir weathered this, now they're legends. Insider sales, inevitable post-IPO payday. They're short-term, you're in for the long haul. So, here's the midpoint revelation. Nvidia bets $4 billion because, well, they see the chessboard. In this AI gold rush, CoreWeave is selling the picks and shovels. It's stable, predictable, and honestly just exploding. Multi-year contracts. They shield from volatility, and the backlog is outpacing spending while investments keep fueling growth. And the markets crash? That was a colossal blunder, basically gifting you an entry. All right, the climax approaches. It's valuation time. Discounted cash flow models are pegging fair value at $220 per share, which is, get this, 55% undervalued. The current price? It needs 120% upside just to catch up. Nvidia's top holding, a viral opportunity to riches, no luck required. But wait, open loops are closing. Imagine Sarah, a startup CEO, signing with CoreWeave. Her AI model trains overnight, her revenue doubles while rivals are left floundering. That's not just some abstract idea, that could be your future. We mix a bit of humor in the absurdity of Wall Street's panic, a sense of wonder at AI's scale, and suspense as risks get resolved. Here's the resonant resolution. CoreWeave isn't just a stock, it's a revolution. So implement this script's drama hook with Nvidia's billions, rise through business mastery, reveal the undervaluation, and climax in that 120% upside. Present tense pulls you in, active voice drives momentum, and concrete scenes make it all real. Emotional pacing, tension, release keeps you hooked. This journey transforms you from a viewer to a victor. In YouTube's attention war, this script wins. Go viral, get rich. Thanks for watching. Subscribe, like, and seize the day.